Ladies and gentlemen, earnings continue. We still have a plethora of sexier names reporting, names that you have obviously heard of from Lululemon, Costco, Oracle, Adobe, Broadcom, so much more. We're going to go through my favorite earnings names of the week. Not only that, we're going to share with you my free link to get all the earnings picks I've ever done from before and after. Not only that, I'm going to offer you a free week of the Newsbeat live room and show you exactly how you could sign up and watch us do these trades in real time. Not only that, we're offering you a free link to how to maximize your experience here at the Newsbeat live room. That sounds pretty good for a Sunday afternoon. I am Mark Melnick, and this is the Newsbeat Show. Good afternoon, ladies and gentlemen. Welcome to the Newsbeat Show. Have a really nice agenda for you here today. By watching this show, you're going to pause the next slide, read it in its entirety, and then continue. Thank you so much for reading that. Okay, let's go right into our agenda. These are the names I'm focusing. I'm going to go ahead and share my thoughts with them for the week. We're going to start off with, is it really everybody's favorite dog food brand? I mean, I am more into the organic foods for my pets. Growing up eating garbage in Brooklyn my entire life, I've, tried to give a better diet to my dog than I would actually myself. And we're going to start off here, of course, with Chewy's. I'm going to start off here with Chewy's right now. Kind of an interesting name. I mean, the stock is a recent IPO'd on June 14th, and the stock has just been sort of in the shambles. Stock has been getting a bit beaten up here. This stock is reporting, by the way, on Monday, prior to the open. So you're going to sort of walk into this one. Um, I'll tell you right now on Chewy's, I am going to come out officially on the record bullish. Bullish. They see this quarter's revenue coming in. Analyst consensus think that they're going to do 1.17 billion. I think the numbers are going to be closer to 1.19 to 1.21 billion. It's a perfect time, especially during the holidays, to spoil your dog, so to say. I think people like dogs more than humans when it comes to pet owners. I think dogs are people, and personally, and I think people are going to splurge money on their pets this holiday season. My dog is a better person than I am. But yeah, bullish on Chewy coming out. I think they're going to crush analyst revenue expectations. They are reporting Monday before the open. I'm going to go on the next thing over here to HD Supply Holdings, and that's, of course, Harry, Derek, Sam, HDS. They are reporting on Tuesday morning. So if you did want to get involved in the stock using our methodology, you'd have to get in, on Monday, of course, if you were playing it. And again, we're going to give you access to see all my biases and whatnot. There's a link in the description to right over here. You get like all the names that I've done in the past, all the winners and the losers. You could see just, obviously for educational purposes only, as a disclaimer. And if you're following us with $100,000 bets as of last Friday's close, you would be up $134,241.15 as of this earnings season, using nothing complex, just a simple enter in at the close, sell at the open. Very simple methodology, and you get all the names I'm watching here as well. There is a free link in the description to have all of that for you. All right, HDS, HD Supply Holdings here. All right, so I'm going to officially come out on the record bearish on this one. They went ahead last quarter. They think they're going to earn 96 cents to $1.05 versus $1.05 consensus. That means in the best case scenario, they're going to meet analyst consensus. They see their revenues kind of light, 1.62 to 1.67 billion. That's below the analyst 1.69 billion consensus. I think they're going to continue to lower their outlook. I think when they announce these earnings here on Tuesday, I think they continue to lower their outlook. You're going to notice like I'm actually bearish on a lot of these setups this week. The majority of, or the majority of the names I chose on my earnings list, you could see, were bullish, and that's coincidental. I don't really have a bullish or bearish bias. I find it kind of toxic when people say they prefer one side over the other because it leads to an inherent bias that can end up hurting most people. So I do believe in remaining neutral and if something sets up bearishly, go bearish. If it sets up bullish, go bullish. So again, I will be coming out. Think they're going to continue to lower their revenue and guidance for the quarters coming. Bearish officially on HDS. Next is a name that I have never heard of I mean, I've heard of it, but I don't know where a single Ollie's Bargain Outlet Holdings is. I mean, I'm not here to, comment on what a company can name themselves. He's probably the richest Ollie ever on the planet. Whoever Ollie is, they're probably the richest Ollie in the world. But I will say this on Ollie's Bargain Basement or Bargain Outlet. They changed the name to Bargain Outlet from Bargain Basement. I guess, Ollie, once he became a billionaire, did move out of his basement. Probably opened up a store in the outlets. Anyway, last quarter, they announced 35 cents per share. That was below the 46 cents expected. They last reported on August 28th, so you could see the stock literally gapped down $20. Yikes, $20 drop. And this is no $1,000 stock here. This is a stock going from $77 to $57. So absolutely pummeled on their last earnings report. They cut their fiscal year 2019 earnings per share view, $1.95 to $2 from 213 to 217. They lowered their revenue a little, 1.42 to 1.43 billion. Their analysts were expecting 1.45 billion. Okay, I will say this on Ollie. I don't see things getting better for this store. Forget about the fact that I cannot tell you where an Ollie's Bargain Outlet is located near me. I'm sure I could look like online, which I'm sort of curious about because how many of you guys have never stepped into an Ollie's Bargain Outlet? How many of you guys have never stepped foot inside one? So apparently they are located in Jersey, near me. I mean, this is where the home decor and toys sounds pretty cool. I guess they are all around here. Again, I did not know where one was, but nonetheless, I see their earnings getting worse before they get better. I am going to be officially coming out on the record bearish in OLLI. Next on the radar, do you guys remember American Eagle Outfitters? I think back in the days when I was in high school, um, kids used to come in wearing, Abercrombie and Fitch and American Eagles and what was that, Hollister and like to me those are all the same stores. Like they all sell the same identical things with just a different brand insignia on them. Nonetheless, looking at American Eagle Outfitters here, let's just go ahead and take a look at AEO. Very beaten up name, trading well off the highs. They're expecting this quarter's earnings coming up. Analysts are expecting 52 cents per share in this. I see it more in the 47 to 49-cent range, as does the company. I don't think these earnings are going to be good. The only thing, if you know where an American Eagle Outfitter is, odds are they're shutting down. I know the GameStop near me is shutting down. They have like it was kind of crazy, because GameStop is reporting this week too. This one's not on my list, but I do want to discuss it a little. So just for the record, I will be bearish on American Eagle Outfitters. All these retailers are just getting crushed. Walk inside your shopping mall. You want to know where it's packed? The food court. That is where it is packed in your shopping mall, the food court. Now, sure, you have a Black Friday sale and people are walking around looking for a deal. I want to bring up GameStop because the GameStop near me is officially shutting down. They are officially shutting down the GameStop. So they have the thing, everything up to 30% off, no returns, manufacturer warranties still remain, but no returns to the store, final purchase, final sale type thing. And I'm like, as a somebody who I guess I'm a gaming nerd, so to speak. I have to step in the store. So like I walk in the store and I'm looking around and like, you know, I go and I want to buy Super Mario Party for my son. By the way, we're not going to let him play video games. Had that discussion, not at an early age at least, because he could turn out like his father. How did that work out for me? Um, and I'll tell you there, like the Super Mario Party with the 30% off was like 52.99, and I just like on my phone and I'm like, I'm just curious. Show me, like, I don't mind supporting local mom and pop shops. I don't consider a national business a mom and pop shop like a GameStop. It's obviously a publicly traded company. So I looked on eBay and I could buy this game for 42 bucks, $10 cheaper, 20% cheaper than GameStop with their 30% off sale. And I looked at everything from nerdy magic cards to these random toys and video games, and every single one of them were more expensive than Amazon. And I looked around, and it's like, when you back out, like when you walk in on something you weren't supposed to walk in on, and then it's like you're slowly just walking back, like through the door, like you're just slowly walking back, and you're like, while keeping your eyes on the store while walking back, trying to sneak out. That's how I felt like at the GameStop. The point is, these retail outlets, the reason why they're going out of business is because they just cannot compete pricing wise with an eBay, with an Amazon, with these online retailers, which will give you free shipping right to your door. you know, why would I ever want to go to a GameStop? And I feel bad for it because, I love the mentality of these stores and whatnot, but when you have overhead and you have rent and you have all these things to pay, these companies are just not going to make it. So yeah, bearish on American Eagle Outfitters. Next thing on the list is going to be Children's Place, and I happen to know the owners of this company. They are billionaires, and they walk around with actual armed security guards around them, which I've always found slightly hilarious. So PLCE over here, Children's Place, definitely getting beaten up. And no, I don't have any, information on this company, but I'll tell you, they sort of fell off the map. They started stopping to go to some of the higher profile events that I've seen. I haven't seen them around in a while, and I will say that this company is likely going to get destroyed on earnings. Very bearish here on earnings on Children's Place. Analyst is expecting $3.51 for this quarter's earnings coming up. They'll be lucky if they break $3. Like I would say they're probably going to be between 2.90 and $3 on their earnings per share view, which is a massive miss from $3.51, which is analyst consensus. I see them lowering their next quarter's earnings after this one. Street is expecting them 5.75 to 6 and a quarter. They would be blessed if they hit that 5.75 level. I think you're going to be probably between the 530 and 575 range for the fiscal year 2019. Their comparable retail sales decreased 3.8% in August. And I'll tell you this, if your sales are decreasing in August, you ran into issues. This is just another case of another company getting gobbled up. I'm sorry. You're spending these, and I really am sorry for these stores. You're spending this ridiculous overhead. Parents, time is valuable. Time is valuable. Like as a father, I have a couple kids here, and I realize time is actually my most valuable asset. And well, again, I do like to support, I'll support charities if I need to support something, but I don't want to go to the mall, park my car, be pushing a stroller with my son, holding my hand with my other son, going through an entire mall, walking into a children's place to spend like 150, 200% more for a similar comparable item that I could buy online and have it delivered to my house for free. The reason why I say this is because most people think this way. There are a few exceptions. I think when it comes to certain women's shoe stores, I mean, already my wife is like hitting up Zappos and she'll order like 10 pairs of shoes. And if she keeps one, she'll return nine because that's how they are. They're like, try it out and send back what you don't like. Like all these retail stores are just to me like they're going out of business. Like if you have to sit there and, and spend all this money, to just get a local crowd of people who could see you, you're going to be better off online, mailing it to everywhere in the world and showing your products online. Obviously, I think Children's Place is going to get destroyed on earnings. They are announcing Wednesday before the open. FYI, very, very, very bearish on Children's Place. Next, well, I'll spoil you with my answer. This is the only retailer I'm actually bullish on. Lululemon. I don't know if you guys have ever walked inside a Lululemon. I did. Put it this way, um, it reminded me like I was going to like the Abyss in New Jersey when I was like underage sneaking into a nightclub with a fake ID. That's what it reminded me of when I stepped inside Lululemon. Except there were a lot of lights as opposed to darkness all over the place. It was kind of nuts. And I will tell you, you walk inside Lululemon and you have like, all these high-end clothing. I mean, their clothing is of really good quality. And, and you have these you know, people walking around. When I went in the stores, the majority of the shoppers were women, and they're pushing around these carts. And you have this music going on, and it's like, and they're pushing around their carts. And like I'm walking around, and I'm looking at their carts, and I'm like, this lady must have like $1,200 worth of clothes. I mean, she has like, four pairs of pants and a couple shirts and one other random item. And you're sitting there like these items are like 100, $200. They're like really expensive. They're good quality too, from what I've read and heard of. And I'm sitting around these, and they're just pushing around these carts with like 500 to $1,000 worth of merchandise. And I'm like, it's like you walked into like a clothing bank. It was the most surreal experience. Every Lululemon I walk into is packed. I will say a name like Lululemon is trading at all-time highs. It definitely, at the same time, it can take a break. It's really hard to, start looking at a stock that's priced this high because as soon as you see a stock trading at all-time highs here, especially a retailer, you have to stop and you have to ask yourself one simple question. How good is this company fundamentally? It's a $30 billion company as of this moment. Has a $56.50 PE ratio. That's nothing special. I don't know if it should be particularly higher or lower because you have companies like, for example, um, like Express, EXPR, and they have a negative P ratio. They just sit there losing money. And companies like L Brands is actually a company with a very just let me type it in real quick. L Brands is actually a company with a very good P ratio. That's like Victoria's Secret's $13. So it's very hard to really look at Lulu because you really are paying for growth in this one. You really are paying for growth when it comes to Lululemon. And I will say that I'm extremely bullish on it still. It is the only clothing apparel store that I am coming out, bullish on through this video. They're, analysts think they're going to step in and make 864.42 million. I think they're making 880 to 900 million. I think they're going to blow those numbers out by 30 to 50 million dollars. I think easily. Analyst consensus is that they're going to make $4.65 for 2019. I think that number is going to be closer to 470. Um, Stock is just an absolute animal. Again, it is kind of worrisome when you have an apparel store trading at all-time highs. I get it. I think the numbers will be good. So I will officially be on the record bullish on Lululemon. Last on my list here is Oracle, ORCL. And this is a very interesting one and a very sad story here on October 18th on Oracle. Right over, where's October 18th? Right over here. Here's October 18th. You could see it just fell down a little there. The co-CEO, Mark Hurd, died. He passed away. Um, Larry Ellison was saying how he was very close to him, and He was his close, irreplaceable friend, trusted colleague, and unfortunately, he did pass away, and it is a very heartbreaking story. Now, before October 18th, on their last earnings report, they actually reported on September 11th. Right over here, the stock opened up about $2 lower before falling a little lower throughout the day. With all the troubled stuff, and just I want to remind you that on September 11th, Mark Hurd, who did pass away a month, 5 weeks later, did take a leave of absence for health reasons. And, the board of directors granted him a medical leave of absence. He did step away, so this wasn't really a surprise that this happened here. But their numbers have just been struggling recently. Um, I am going to be officially coming out bearish. Analysts are thinking they're going to make 91 cents in constant currency. I would say that number is probably going to be closer to 88 cents. I see them missing. I don't see anything really super positive happening now with Oracle, and especially with what's happening on, especially when you have a CEO walk away for leave of absence, you have to sit there, you have to try to replace him. I mean, again, I don't understand what his job description was, but if he's co-CEO of what is Oracle worth? What would you guess Oracle's market cap is? I don't know, 150 billion, 182 billion. I just looked it up. When you have a co-CEO die of a $182 billion company, you're not focused on growth. You're focused on replacement, mourning, things like that. Again, heartbroken, very horrible thing to happen to, somebody left a kid and a couple daughters behind. Just really heartbreaking story there. But nonetheless, I do think Oracle's numbers will be bad, and I will officially be bearish on those names. Next, we have a free week of the Newsbeat live room. You get to see what we do here. Not only that, I created a video also in the link that helps you get fully acclimated to our video. You could get fully acclimated to our video over here. And, we have just right over here, it's the Newsbeat Live Welcome. And we do share this video. It goes through a really nice agenda. As you could see, it shows our Newsbeat Live Room's purpose. I could actually show you everything here that we go through in the video. We talk about the strategies we apply, how we speak throughout the day and why we do so, our morning analysis, how we run the entire room and why we do it. And it's definitely, value added. So we do have a free week of the Newsbeat Live Open Room. Uh, Free week of the Newsbeat Live Open House for our room. We do have a sign up link in the description if you are interested in checking us out. And yeah, I definitely look forward to seeing a lot of you. I look forward to serving you. You could come see why we're T3 Live's largest, fastest growing trading room. You could get comfortable with what we do. You could absorb, learn, and then finally execute. You could see why so many people are having success here within our community. So again, if you do want to see all the earnings names we picked and more for the future, check out the link in the description. That's free as well. I have a lot of free goodies for you. Slap the like button if you enjoyed this video. Happy trading, make money. I will see you guys tonight for the Newsbeat show. Tonight, Newsbeat live members for the group coaching. And tomorrow morning for our first day of our 1 week open house. Have a wonderful, wonderful weekend.